Good afternoon, everybody, and welcome to this week's weekly analysis session for the good old US of A. It's Monday, the 9th of May 2016. A disclaimer: the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of our presentations, you must consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. You will have to bear with me today, folks. I've had a bit of a cough that I can't shake. I've had it for probably about a fortnight now, but if you hear some coughing and spluttering, that's just me trying to capture my breath. Again, as per usual, we'll go through and have a look at the portfolio management. Sounds like I'm in a tunnel, Kim, yeah. Well, I think that's probably just my voice. So hopefully it comes through reasonably clear. I will try, and if the voice starts to wane a little bit, I'll pause and have a drink, and hopefully you can all hear. Our portfolio management, we'll go through and have a look at what's happening in the US, but also I just want to have a quick look at the Australian market as well. I did do a session over the course of the weekend. We'll have a look at some new setups and some Q&A as well. S&P 1500 in low risk, has been in low risk for a couple of weeks now. So generally moving in the right direction, and a lot of the volatility has tapered off as well. So that's a positive sign. And again, if we're dealing with direct shares, then we're really saying at this point in time, according to our benchmark index, that we can be pretty much allocating most of our capital to the market. And as such, because we're in low risk, using a 100% market risk multiplier. Very difficult to get maximum exposure up at that 15% level when you're using the value at risk model, purely because you just run out of money before you get to those particular levels. All right, so this particular week there are quite a number of new setups. I'll go through. I managed to find 23. I reckon probably some of you out there may have even found a couple of extra ones as well, so more than happy to have a look at those. There are a couple of cancellations from the previous week. Again, deteriorating price action. There were a number of trades from the prior weeks that did trigger over the last 5 market days, and a number of existing positions had their stops trailed. So again, doing the right thing by the watch list. There were no stop outs as of last week. All right, so we might go through and have a look at our index. This is the XJO, the Australian market that we use as our primary indicator. Really interesting. I was just thinking that when was the last time that the Australian market was in low risk, and it's pretty much around about 12 months ago. All that time we've either been in moderate or worse, and I find it really fascinating that whilst that's been the overall direction of the market, that there's so many stocks in that watch list, there haven't really been, by comparison, a huge number of stop outs over that period of time. So the relative strength aspect has really worked very, very well. So again, something to remember for the future, that how important that relative strength comparison is. Let's go and have a look at the US market. Over the last 12 months, really we've pretty much gone sideways. If we look at whereabouts we were this time last year, we're at about the similar sorts of levels, but we've just had these massive bouts of volatility along the way. And every time the market looks like falling out of bed, it manages to find strength. And it's done that on a couple of occasions, and just the overall volatility, it's just it's really extreme in the US, and I think that's something those of you who choose to trade that particular market or invest in it over sort of the medium longer term really need to take that into consideration in managing your overall positions. And certainly these sorts of events are really good learning experiences. They're going to help you become better investors over the longer term, but certainly they are very character building, to say the least. All right, so what we might do first and foremost is go through and have a look at some setups. Excuse me, I'll just grab a quick drink. There we go. So 23 in all that I managed to find. So we'll go through those and and review them as we go through. So the first one, AEIS. It's a little bit like old McDonald's, isn't it? We're back into short-term uptrend. New medium-term trough having formed as a result of that. That trough well above second from last medium-term peak. If we just zoom out and see where we are, you will notice that certainly there are longer-term peaks many, many years ago, and they're really irrelevant. I'm happy to go back to sort of the middle of 2008, GFC sort of time. Anything before that is really getting really out of date. So if we look at this particular setup, in terms of price action, you'll see the price action is really quite nice. And more recently, starting to get a few more white candles in there as well. Good relative strength. So as such, we just need to wait for the break of that last medium-term peak. So I have an on-stop order there at 35.96. That's 0.5% above that level. And a stop loss coming in at 31.82. That's outside of 2 ATRs, and it is also at least 0.5% below the last medium-term trough. Next one, ALGN. It's interesting, going through a number of these stocks over the last few hours, and some of these stocks that are starting to set up have actually been in the watch list on prior occasions. So it's just interesting to see, once we've been in a stock, perhaps we've been stopped out, to see where it's ended up. And I think that's a really worthwhile learning exercise as well from a trade management point of view, and just getting used to the swings that the market gives us. So ALGN, in terms of price action, last trough at or above second from last peak. Yes, it is. Where are we? Well, we're at all-time highs. So obviously from relative strength point of view, it's moving along in the right direction. Again, this is one of those setups. It's not typically textbook that we might refer to, given that the last two candles have actually breached the last medium-term peak. Certainly from that point of view, the second last candle there, we weren't in short-term uptrend. That's what we call an outside bar, so just a bit of stagnation. And then last week, we're getting back into higher highs and higher lows. So in terms of price action, it's meeting the bill. If we're going to trade this type of setup, we just want to give ourselves a little bit of leeway, and so therefore entering 0.5% above the high of that last candle. So we have an on-stop order there at 76.67 and a stop loss coming in at 68.75. So that's ALGN. AMT, American Tower. Let's zoom out and see where we are. Again, all-time highs. So certainly showing some very good relative strength compared to the broader market. Interestingly, though, that probably for around about 6 months at least, the stock really didn't go anywhere. Couldn't make up its mind whether it wanted to go up or down. We had the converging of the moving averages, etc., a little bit of a crossover. And more recently, with the market bounce, it's just gone straight up. It's had a nice shallow retracement. It looks like it's ready to go again. We've already had our first test of this dominant peak a few weeks ago. So having that first test, we just need to wait for a break of the last medium-term peak. So as such, an on-stop order 0.5% above that level. Our last medium-term trough, that's well above our second from last medium-term peak as well. So ticking the boxes there accordingly. So on stop at 107.28, stop loss coming in at 99.14. It's AMT. Next one, AON. Let's just zoom out again and see where we are. All-time highs. Interesting, we've got a dominant peak back here as well. That dominant peak there, if I just put the cursor over that particular level there, you'll see the high at 107.08. This previous test up here is within 1% of that particular level, so that's our first test. You'll notice that the last candle has just marginally passed the medium-term peak there, so from that point of view, again, allowing ourselves a little bit of room, 0.5% above that level before we get in. So to do that, we're entering at 107.31 and a stop loss coming in at $100.29. That's AON. Brown Brothers. It sounds a bit like well, it's not Brown Brothers, it's Brown and Brown. Maybe they are brothers. They could be sisters. Just zoom out, see where we are. And again, you'll see the history of this. That we've, way back in 2005 when the market was really racing, a dominant peak back then, which we've tested a number of times, more recently back in 2013. Interestingly, since that 2013 period, again, we've just had that really long sideways movement, really drawn out, where the stock really hasn't known which direction to go, had converging of the moving averages, and more recently, strong move up towards the upside of the box, having a bit of a pause, nice shallow retracement. I'll just get rid of, where's my delete key on my keyboard? There it is there. Get that out of the way. And you'll see, last trough that it's just formed, well above second from last medium-term peak, and it's starting to see points of demand coming in at old previous points of supply. So technically starting to look pretty reasonable. What we do need to do is we need to place an on-stop order above the most relevant recent point of supply, and just on this one, you'll see that the high there, 35.91, and this outside candle there, 36.03. So we defer to that dominant medium-term peak there, and we use that as our reference point. So we're earning 0.5% above that level, so 0.5% above 36.03 has us on stop at 36.21. Protective stop outside of 2 ATRs, and that's well below 0.5% below that last medium-term trough. Stop loss coming in at 33.75. That's BRO. CONE, this is one that I haven't actually put as a setup per se. Last week we did have a very, very bullish candle, and this one really, whilst we could certainly enter above the high of this last candle, it has done a fair amount of work last week. So that's one there. I'm going to leave that one out for the time being. Even though everything else, even in terms of price action, is picture perfect and moving along really, really nicely. That's just one more for discussion purposes than anything else. In terms of price action, Campbell Soup. Again, trends really starting to move along nicely, diverging moving averages. Let's just see where we are at all-time highs. So really positive sign, good relative strength. Last trough, well above second from last medium-term peak. We just need to breach the last medium-term peak, and as such, an on-stop order 65.81 and a stop loss coming in at $59.44. Excuse me. So that one they're actually showing some nice movement up, having a pause and some nice follow through, starting to regain a bit of strength. So that's starting to look quite good. The next one, CPT, Camden Property Trust. Again, another one of those examples where price has now moved beyond the previous peak. Not quite as bullish move as the setup that we were looking at on CONE. Still a very nice candle. A stock that has gone sideways for a fair amount of time now and just starting to break out. So where has it been historically? We're at all-time highs again. And given that we're starting to break out there, price action, last trough, well clear of second from last medium-term peak. Again, giving the setup the benefit of the doubt, always placing an on-stop order 0.5% above the high of our last candle. So that's an on-stop order 86.17, a stop loss coming in at 79.28. Interesting that when you get these pin bar types of formations, that once price starts to close above those levels, price can really start to accelerate. Next one, DG, Dollar General Corporation. Zoom out. Again, all-time highs. Been moving very nicely of late. Last trough that's just been created by virtue of the higher high and higher low last week. Trough well above second from last medium-term peak. Looking quite good. We just need to wait for it, be patient, for it to breach the last medium-term peak as well. Interesting, major point of supply over at this previous level does happen to coincide with around about the $80. Having broken through that, it's coming back to retest. So again, positive, natural sort of occurrence when you're looking at things from a technical point of view. So Dollar General on stop 87.86, stop loss coming in at 79.49. It's DG. EIX, Edison International, and again, last candle just marginally breaching their last medium-term peak. And again, so from that point of view, if we're going to trade this, we want to make sure that we've got an on-stop order above that particular level. In terms of price action, last trough, well clear of second from last medium-term peak. All-time highs again. It's interesting, isn't it? You look at stocks and think, how many times have we been at all-time highs? Well, previously all-time highs were around about $60. So back in October of last year, at all-time highs for this particular stock, and pretty much for the last 7 or 8 weeks, this stock's been hovering around all-time highs. So not a bad sign. That's EIX. In fact, I better just go through back up there. On stop 73.61, 0.5% above the high of that last candle. Stop loss coming in at 67.37. Next one, McDonald's. A Big Mac, one with a lot. This is already in the existing watch list, and you'll see that the initial entry there back there at 115.56. Excuse me, on that white candle there, taking us into the trade, moving up, coming back. It's been pretty volatile. It's been moving up and down, but it's actually progressed quite nicely along the way. Last setup, last trough, well above second from last medium-term peak. Again, the last candle has just marginally breached I guess the most relevant point of supply. It's just breached it marginally. So if we're looking to get into this particular setup, given that it's got good relative strength, we're at all-time highs, just give it the benefit of the doubt. 0.5% above the high. The high on that candle, 130.58. 0.5% above has us on stop 131.23. And a stop loss coming in at 123.48. And you'll see that, price action of recent times has been really strong, dragging up the trailing stop from the initial setup. McDonald's. McCormick Company. Okay. So if we zoom out on this one and just have a little bit of a look, again, all-time highs. And if you think about this stock, for a number of years, it's continued to trade at all-time highs. So certainly nothing the matter with purchasing stocks at all-time highs. They're up there for a reason. Price action on this one, it's really quite zigzagged, isn't it? Certainly your medium-term moving average doing well to support that particular stock. So, perhaps something in its DNA that whenever the stock gets down to those levels, the market sees it as values and pushes it back up. Price action, last trough, well clear of second from last medium-term peak. We've just got to breach that very last medium-term peak there. The high on that candle at $100.91. 0.5% above that level has us at $101.41. Stop loss coming in at least 2 ATRs and 0.5% below that last medium-term trough. Has a stop loss at $90.38. Getting there slowly. MMC. Let's see where this one's been. Pretty close to all-time highs on this one. Way back when Tyrannosaurus Rex was ruling the market, there was certainly a little bit of supply at those levels. Pretty much irrelevant these days. Good price action. Interesting, again, that we had this pin bar showing us that there was a little bit of overhead supply. Price action coming back down, forming pretty close to a pin bar the other way. A nice finish on that particular candle. A little bit of a doji there at this, little bit of indecision last week. All we need to do is just wait and break the most relevant price level. Which is the most relevant price level on this one? Let's go and have a look. The high there on that peak, that medium-term peak, is 63.67. And that last candle, 63.78. So we have to, from this point of view, give ourselves 0.5% leeway above the high of that last candle. That's our reference point. So that has a non-stop order there at 64.09 and a stop loss coming in at 59.73. That's MMC. MMM. The next one. Let me just move that value line out of the way a little bit. Might just zoom out, see where we are. Again, coming up to all-time highs. And probably you can see this for yourselves, but I certainly do like this little rectangle tool that we've got on Beyond Charts. It's just really handy for helping you to visualize, major swings between swing lows, major swing highs, and gives you a really clear picture of what's happening. And again, this all goes back to our ballroom dancer during the 30s, I think it was, Nicholas Davis. I can't remember whether it was actually during the 30s, but came up with this concept of the box type of formation, and whenever price starts to move outside the box, that typically we're looking for a move the width of the box. That's the general idea. And what's the clue that something's about to move out of the box? Well, we're really looking for a series of higher troughs on the upward side, and we've certainly got that more recently now, testing the upward edges of this box. We've already had our first test of this major peak, dominant peak. Had a little retracement, nice shallow retracement. We've just got to wait for a breach of our last medium-term peak. So the high there, 170.77, 0.5% above that level, takes us up to 171.62. Stop loss coming in outside of 2 ATRs, and you'll see that the 2 ATR levels is well and truly way past 0.5% below that last medium-term trough. So it has to be at least 0.5%. And that certainly is the case there. Stop loss coming in at 161.67. That's MMM. PEP, PepsiCo. Let's see where we are. Despite the diabetic epidemic around the world, soft drink manufacturers continue to see a lot of their stock charts moving in an upwards direction there. Interesting, last trough at or above second from last medium-term peak. Yes, it is. Again, some really big swings, isn't there? And certainly very character building when you experience that type of move. And it is certainly going to happen from time to time, particularly in the US. So basically, we really just need to wait until we get a break through this last medium-term peak there. And if I can just get the mouse to hold still, the high there, 105.77. 0.5% above that level is 106.29. Certainly well clear of a 2 pips level. Stop loss coming in at 99.91. So again, just making sure that the stock does that level of work. And from that point of view, before it actually triggers us in there. What you got there, Kim? Price action. I'll have a look there. Maybe let me just see on that one. So the low, 142. The high there, 170. You're absolutely correct. Well picked up. I'll blame my cold on that one. So certainly price action there, absolutely correct, Kim. That trough is not at or above second from last medium-term peak. So my fault on that one, folks. Other than that, a legit setup. Next one, PM. No doubt that the last trough there, well clear of the second from last medium-term peak. Let's go and see where we are. Nice aspect that it, on this particular one, again, just in terms of sideways movement, it really has been a long, tiresome journey for this particular stock, just continuing to move between lower reaches of around about $75 and around about $95. Having more recently broken out of that range, it's come back to retest, which is quite often the case. And interesting, the last two candles, if we were to add those two candles to the previous one, we'd be getting up towards a big bullish pin bar. So looking quite strong, this particular setup, given that we've broken out of this very much a long, protracted sideways movement. We've still got to wait for the break of the last medium-term peak. To do that, we've got to have a non-stop order at 102.51 and a stop loss at $95.43. Again, at least 0.5% below that, last medium-term peak. Interesting again, isn't it, that these major points of supply that we've had previously are starting to act as future points of demand, and so it often goes. ROIC. Now I'm just going to check that one. I'm pretty sure that that last trough there, last trough, the low, $18.80. Last high there, 1881. Is that 1880? Yes, it is. So we're going to have to scratch that one, folks. There's only a hair's breadth in it, but rules is rules. I wouldn't be too upset if it was only a cent difference, but again, a rule is a rule. Certainly in this particular example as well, the last candle there has just breached that last medium-term peak, but certainly moving in the right direction. So I won't put that one in because it hasn't met the rules explicitly, but good price action nevertheless. Excuse me. RSG, let's zoom out and have a look at this guy. Again, moving really, really well. Interesting how long a stock can really sort of trend for when the market really, really likes it. And obviously in more recent times, market has been quite conducive to following this particular stock. And longer term, your blue line, your 63 period moving average has generally worked pretty well on this stock as a deferred way of managing your trades if you're not using the 3ATR. All right, so in terms of price action, last trough, well clear of second from last medium-term peak. That's important because it helps validate the setup in terms of price action. We just need to wait for price to breach that last medium-term peak there. That last medium-term peak coming in at 48.76. So from that point of view, 0.5% above that level, has an on-stop order at $49 on the knocker, and a stop loss coming in at $45.32. That's RSG. SBGL, Sibanye Gold. Yep. Okay, so what have we got? Now we're back into short-term uptrend. Therefore, also at the same time, forming a new medium-term trough, which is absolutely well clear of any previous medium-term peaks. Just zooming out, obviously the moving averages don't go all the way to the end. Even the longer-term one has only just started to kick in. But nevertheless, good relative strength, good price action. We just need to wait for a breach of that last medium-term peak. An on-stop order at $16.71 and a stop loss coming in at $15.53. That's SBGL. Constellation Brands, STZ. This is one that has been in the portfolio, that watched this on previous occasions, only to be stopped out. I think it was on some price action based rules from previous, but you'll see quite clearly, along the way there, this is a stock that has really respected its longer-term 3ATR trailing stop. Now it just continues to go up higher and higher and higher. And again, you'll see, as an example, even your 63 period moving average. Okay, so your trade management doesn't need to be complex. It just needs to be something that you can repeat, that you can do over a period of time, and that you're comfortable following that particular method of trade management. In terms of setup, in terms of current setup, last trough that's just been formed well above second from last medium-term peak. We're at all-time highs. I think Constellation, from memory, I think they might be in the alcohol game. Who said there was any money in alcohol? Anyway, so on stop, we just need to breach this last medium-term peak. On stop order at 161.19. Stop loss coming in at 149.07, and you'll see that particular level there, and that's well and truly way past 0.5% below that last medium-term peak. And the reason it's down at this level is that it must be at least 2 ATRs away, and that's hence the reason why our on-stop order is down at 149.07. That's STZ, Constellation Brands. Next one, Southwest Gas Corporation. Let's just zoom out and see where we are. All-time highs again. Just zoom back in so we can all see. In terms of price action, last trough well above second from last medium-term peak. You will notice as well that the last candle there has just marginally breached that last medium-term peak. So again, if we're going to trade this particular setup, given that it's now starting, these old major points of supply are starting to act as points of demand, we just want to give it the benefit of the doubt, and 0.5% above that high of the last candle. So that will have an on-stop order at 68.49. Our protective stop loss coming in at 62.43. That's SWX. Oh, must be getting close. SWK, Striker Corporation. And that rings a bell that I've seen that somewhere along in the watch list as well. Price action. Just zooming in. Last trough, well clear of second from last medium-term peak. Interesting again, pin bar, we're starting to see a little bit of supply above that level. So giving the stock plenty of room to negotiate that last point of supply, putting an on-stop order in 0.5% above the high of that level, and then a protective stop at least 0.5% below that last medium-term trough, and it's got to be at least 2 ATRs from our entry level. On stop at 114.41, stop loss coming in at 106.17. And that is the last one, waste management. So again, coming up to all-time highs, which is a good sign. Obviously, a lot of strength in this one. This one, look, whether or not you wanted to take this, it's had two very, very strong candles, as opposed to one strong candle and one sort of indecisive one. So potentially a little bit of energy spent on that one already. But other than that, look, price action's really good. Good relative strength recently as well, and looks like it's starting to move up into newer levels. So if you're going to trade this particular one, an on-stop order 0.5% above the high of that last candle at 60.94. That's 0.5% above that will take us up to 61.24. Stop loss in this particular example needs to be at least 0.5% below the last medium-term trough. Our 2 ATRs from the entry level had a protective stop just above that last medium-term trough, so we do have to defer to our 0.5% rule, and that's why the protective stop is coming in at 55.76. All right, folks, over to you. Any setups that you managed to find? SBGL, Kim, yes, quite a wide stop on that, 20%. So again, ideally, in terms of bang for buck, having those narrower protective stops somewhere around your 10 to 12% is going to give you the best value, the best value in terms of risk that you're going to allocate and the amount of work that the stock needs to do. Certainly, in terms of price action, you will get some setups, and if the stops are wider and wider, it just means you need to adjust your position size accordingly. The reason why those stops are wide like that, it basically just means that the stock's more volatile, which can be a good thing. It can be a bad thing, but certainly a good point to remember that if you are having wider stops, it just means it needs to do a lot of work, and if that's the case, then really you're better off having a stock that is volatile if you've got a wide stop, because it's more likely to be able to do the work rather than something that's very low volatility with a wide percentage-based stop. So, Steve, David, would you kindly discuss ownership and use of Beyond Charts going forward? Yep, absolutely. Beyond Charts is a completely separate organisation to Elite Wealth. Beyond Charts is a company that is owned and run by Gary Stone, who runs the ShareWealth Systems company. Gary is a terrific bloke. Certainly I would consider Gary to be not just a friend, a colleague, a business associate, but also a bit of a mentor as well. I've known him for a long, long period of time. I've known ShareWealth Systems long before any association with Elite Wealth or Australian Stock Report on years gone by. They will continue to be around for a long, long time. And as such, your Beyond Charts scans, formulas, etc., you will have until the end of your current subscriptions. What happens with them after that is still yet to be finally confirmed. So I can't comment on any further than that, other than to say that you'll have absolutely the use of all your scans, etc. You'll still be able to get data from Beyond Charts for as long as Beyond Charts are around, when I consider that they'll be around for a long, long time to come just yet. John's asked about the watch list. Yeah, there will be a watch list out this afternoon. I've got a bit of work to do on that one. Kim, I have 3 for you. DLR. Oh, I thought I had DLR in here. DLR, maybe not. Might have been one that came up when I was going through. Let's have a look. DLR I had in last week, Kim. You'll see there last week we did have a higher high and a higher low. So that was in last week's setup, and that's actually just triggered the entry level. So I had that one. EQIX. EQIX, I think from memory, I might have had in the previous week, but didn't officially have do an annotation. Didn't do not an annotation, an overlay for it. So certainly that is one. I've had a look at that before, and I'll just put on my US weeklies as an example and put on the price action in case any of you haven't seen this particular one. And looking very good as well. A good relative strength on this one. Last trough there, I'm pretty sure that is above the second from last medium term peak there. The low 316.30. The high there, 315.81. So price action, yep, ticking all the boxes. And I think from last week, because we had the higher high and higher low as well, that was in. I just didn't create an analysis. That's the word I'm thinking for that particular one. So have you got numbers for that, Kim? Because I'll annotate that now if you happen to have those. And the other one, I'll open up another chart, is I think it's HIW. Looks like it. And we'll put on our weeklies as well. Yep. So just zoom out. Getting up to all-time highs again. Thing that I immediately see with... Whoops, that's the wrong one there, David. That I immediately see with this sort of setup, is this floor to ceiling type of movement and getting up towards the ceiling there. And again, whilst price has moved beyond our last medium term peak, this previous medium term peak, I don't think that's if we go through and have a very quick look at the high there, that high coming in at 47.22, and the high back there at 48.34. So that one there, I don't think that's quite meeting the 1% rule. That's all. Okay. Kim just says no first test. That's cool. No dramas. All right. So they're the setups for this week. I just want to go through just very quickly. Don't have numbers for EQIX, so that's okay. Let's go through and, in actual fact, I think it might be in the watch list. If it's not, I'll put it in. But to save a bit of time, what I will do for the remaining 5 minutes or so is I just want to make a note of EQIX just to make sure it is in the watch list. Is just go through some of the pendings from the previous week, because there are a number that triggered last week. Okay, so the ones that triggered were BWXT. Just go through these and just have a look there. Just last candle there, just nicking us into that one there. CHTR as well. Charter Communications. And again, a little bit of a pin bar entry on that one, so I'll just have to wait and see what happens during the course of this week. DCT. Triggering in there. And really nice candle. So interesting, those last two ones that we've just looked at there, one that had previously passed the last medium-term peak and triggering with quite a bullish candle. The previous one there that we just looked at was CHTR. I'll just go back to that one. Same sort of setup. in that this candle was a bullish candle for our setup. That was the one that had already just sort of breached our last medium-term peak and put us back into short-term uptrend, and we got triggered into that one on a pin bar. So, you know, you never know. I mean, again, it's the old Forrest Gump, isn't it? You never know what you're going to get. And that's the crazy thing about the markets, that, you know, you can look at setups and go, look, that one looks really good, only for it to trigger in and turn around and go completely the wrong way. And some setups look very average in terms of, perhaps how many white and black candles they got, and yet they trigger and they fly. So, again, that's going to happen. The really important thing with all of your trading and investing, it's not what you do, it's not how you get in. It's really important what you do once you're in. Other ones that triggered last week, DLR, that was the one that Kim just mentioned before. Had the previous setup there, and that's actually just triggered in last week as well. So nice candle last week. Certainly not too late to get in if you wanted to. And again, just 0.5% above the high of that last candle. INXN. That just triggered last week as well. So the entry level there, 35.07, and the high, 35.07. So we're in that one as well. Some trail stops from the current open list, AWK. Again, just moving really, really nicely. We've had a couple of setups on this along the way. So if you took the first setup, there's absolutely no reason why you shouldn't still have some of this in your portfolio. Along the way, they have from the initial entry, there are a couple of price volume volatility. So, you know, if you're getting close to 2 to 1 up, certainly think about taking a little bit of profit off the table on that. But other than that, moving along really, really nicely. MCD, McDonald's, that was one that we'd had a look at before. Again, last candle moving or being responsible for dragging that 3 ATR line upwards. TWC, this has just been really slow since initial triggering, but it's just started to get a bit of a giddy up on more recently in last week's candle. Again, just dragging that up a little bit higher as well. TWC, WTR, Aqua America. Again, last week's candle just dragging trailing stop up gradually. CONE, another one. And again, hasn't this just moved really, really nicely? And again, it's not without its big swings up and down, and you're feeling pretty good as stocks are moving up. But you got to remember they are going to have swings back down, and it's important from a longer term point of view. Just keep things simple. That's how you end up with those multiple R winners. COR, Coresight Realty. Again, exactly the same sort of thing. Some big swings up, some big swings down. So one week feeling like you're on top of the world, and next week price coming down during the middle of the week and thinking, oh crap, I'm going to get stopped out again. Well, following your rules, a couple of months later on, the price has gone from $60 and it's getting close to 80. So again, just follow your rules. BIN, Progressive Waste, triggering in a couple of weeks ago, but last week's candle just dragging that 3 ATR line back up above the initial stop, so that's going in the right direction. And NOC is a recent entry as well, and again triggering in and moving along and just dragging its 3 ATR above its initial 2 ATR based stop. So there we have it, folks. Comments. Can I just watch this? ETC is dated 26th of April. That's what I didn't say. Yeah, I will get out a revision of the watch list later on today, so I'll send out the email as soon as that's available. The video recording should be up and live within the hour. All right, folks. Any other questions, observations, comments? All good? Very good. All right, well, look, we'll end it there, and I'll get this published, put online, and get the emails sent out as soon as I can. Have a great week. Bye for now.